13 things you need to know before you invest on Lofty. What's up, YouTube? It's Joe Cacciapaglia sitting on the couch, making some money investing in fractional real estate online, as usual. I do spend a lot of time talking about the deals that I've done on Lofty and the money that I've made, and that is actual. I've had quite a few good investments on this platform, but I think hopefully I'm also fair in pointing out a lot of the problems. Uh, what I wanted to do tonight is take try to give you that list all in one place of uh, major issues that I see with the platform that I think you need to be aware of and factor into your decision making when making a property, or when thinking about if we're going to invest in a property or not, or at least these are things that I think about, right? I mean, I don't think the list is exhaustive. I think there are probably a bunch of other things. And so, for example, I'm not going to talk about, well, you need to check the flood map or you need to look at sales comps, look at all the due diligence items. That's not what I'm talking about. I'm talking about specific problems that are related to the Lofty platform, or specific, not necessarily problems, but issues or things maybe you wouldn't understand right away or wouldn't work exactly how you expected. And so I'm going to jump into it. Okay, the first one is that you're on almost all of these listings, you're paying a 5% premium. So one of the things they do, on their financial tab, they tell you, okay, this is the underlying asset price, and they give you an appraisal. Well, almost always that appraisal is, they're tacking on 5%. They allow them to tack on a 5% premium on top of the appraised value when they list it on the platform. Now, as an investor, that's not something I'm super excited about ever, right? I don't want to be paying more for the property than it's currently worth. I know on some other platforms they add a fee onto onto the acquisition. I think it's a little different here because it is set, there's also separate free fees in addition to that. So let's look at that. So, just something to be aware of, not necessarily anything hidden. They do always tell you, what you're paying for the underlying asset, and they do give you the appraisal. But if you're not sitting there thinking about it, doing the work, you won't notice that on almost every single one you're paying a 5% premium. In addition to that, when you buy those tokens, you're paying fees on the purchase. If you buy them from the original seller who's selling them as a limit order, you're going to pay a total of 5.5%. You're going to pay a 3% lofty fee, and then a 2.5% operating reserve contribution. Now, that contribution, especially in that original purchase, isn't exactly a fee because it's money that gets put into the operating reserve for the property. But as that gets expended, like when you sell when you sell your tokens, you don't get that money back. So if you purchased and then turn around and sold, they get to keep that contribution that you made. So it ends up acting very much like a fee unless you just hold the property through the whole, through the whole holding period and the sale at the end. Otherwise, it is. And so, on the purchase, you're paying a 5% premium, and then you're paying 5.5% more than the token price on top of that. And in addition to that, and this isn't even on my list, but they do also include any closing costs in that sale. And so this is quite a bit different from if I'm going and purchasing a property in real life. One, as an investor, I'm never paying more than market value, right? If it doesn't appraise for, I have an appraisal contingency and I want to buy it for less. So that's number one. And then number two, uh, I'm typically, although I am paying realtor fees, usually they're getting paid out of the seller side of the, closing statement. And so, I'm only paying closing costs, not those fees. So on the purchase side, there's significantly more expense than what we'd normally expect if you were buying real estate in real life. And so that's just something to keep in mind, right? When you're trying to compare this deal to, your other options to invest in. Um, Speaking of which, please like and subscribe. Tickle that like button. In the description to this video, I have a link to all the places where I'm currently investing in fractional real estate online. Just because I invest on some of those platforms doesn't mean that you should. You should do your own due diligence on all the platforms, including Lofty, and on any of the properties that you might want to buy on there. Just because you see me buying them doesn't mean that you should. Also, in the description to this video, there's a link to a Discord channel that I have set up that a large group of us get in there on a regular basis and talk about fractional real estate investing across multiple platforms. So you're invited to that as well. All right. In addition to those other fees, Lofty does charge a $750 annual fee. This is for basically taking care of the tax returns for the DAO, and they don't actually do, the entity doesn't actually do tax returns, but we get, they do some accounting for it, and we get like these consolidated 1099s that, and this is, if you bought a property in real life, you might, and you have it in its own LLC, you might have some expense like this. For me, for the properties I have in LLCs, I'm paying significantly less than this annually per entity for the work that they're charging us for here. Um, and to be perfectly frank, the tax forms that they give us are, this year were horribly inaccurate. So we're getting charged for something that we're not really getting the value of, and so that $750 per year isn't a big deal on a property like this one. But for example, uh, a property like this one on the platform, right, where we're getting, I think this ends up being, what is that? So that's annualized rent. Let's look at what that actually is. 10,200 divided by 12, $850 a month in rent. So every year we're paying $750 for these fees, which is almost a full month of rent, right? That's something to keep in mind. It's one of the reasons I believe a lot of these smaller, cheaper properties don't really work on Lofty because it is, really all the layers of fees and expenses make it, some of, for the ones that are fixed, it's a lot easier to deal with for a more expensive property. Um, and then, but so that's, it's an expense. It's all of this, is part of the price we pay to have the platform, right? It's not as if, um, I don't want them to make money and I don't want the service provided, but if you sort of ignore these things when you look at the deal itself, it's really easy to start to think that these properties work much better than they do. One of the things when I see people doing math around these and they'll create their own little, pro formas, a lot of times they'll miss this annual fee, and for especially for the cheap properties, it's a big deal. Okay, the debt structure. This is a big one, right? So I'm on the wrong tab here. On almost every co-ownership property, if there is debt, the debt is not paid for by the LLC. The debt's paid for, let's see if we can find it on this one. I'm pretty sure it's, yeah, property leverage. So there's a loan on this, but it says as the seller, Mark Johnson pays 100% of the loan payments. And so as he does that, he gets more equity in the property and we get diluted. And so this structure itself is what makes it so Lofty can give really good yields because if the property's cash flow doesn't have to pay for the debt, um, there's more cash to be distributed to the equity holders, and and it's only distributed to the tokens that are sold, not the ones that are set aside for the debt. So that structure, I think well, I know it throws a lot of people off when they first get here. And I think one of the things is people don't really understand the risk created by it. Because, for example, if that seller can't pay that debt, right? If the co-owner who brought this property to the platform all of a sudden can't pay the debt, that debt is still, that mortgage is still a lien on the property, and so the DAO ends up having to pay it. And if they can't pay it, that the lender can foreclose on the property, and so that's something we're actually starting to see in some of the DAOs where that's a real risk, right? Where there's some of the Yom properties that are being turned over, where where he's basically said, "Oh, yeah, I have this mortgage, but you guys have to figure out how to pay it because I don't own any of that property anymore. I sold 100% of my tokens. You guys took over management. That's your issue to deal with." And um, that's a risk that I've been aware of this whole time. I think a lot of people have been completely ignoring. As soon as, and a lot of people are like, okay, well, we'll just get a loan inside the DAO. But as soon as you do that, the finances, the actual economics of the deal change drastically. And a lot of them will be money losers if they had to pay the debt, right? A lot of times the yield only exists because of the debt structure. Another thing that I think is not always obvious to people when they're first getting on here is unpaid bills and negative operating reserves. So, for example, let's see. Um, when you're looking at a property like this, you look at the financials tab and you say, okay, we have an operating reserve. Okay, this is negative. This represents unpaid bills. Um, when we go to the details page, there's no loan info, but on top you can see, oh, well, we did take out a loan from, we don't have the regular leverage section, but we have this. Okay, this Dow also took out money and owes money to the universal lending Dow, right? And so if I'm looking at this property and I'm not paying attention, I'm missing the fact that it has, you know, let's see, usually the 860 or $8,600 that it owes um, to the Universal Lending Dow, and also unpaid bills to the property manager. Now, and what's interesting too is that doesn't even match up. Oh no, it does, right? The 3681. Yeah, I think it does. Well, yeah, close enough. One, I think one is maybe rounded. Um, but yeah, that's something that you have to look at on every single deal that I think a lot of people are just missing when they're doing their math. Especially the one that I see it most is when they're calculating their discount. So if I say, okay, this property is worth 100,000 in real life, and if I look at all the value of all the tokens, that gets me to 80,000. So there's 20,000 in equity. But oh, wait a minute, we have these unpaid bills, and we have a loan, this other loan, and all of a sudden you're underwater, right? So that's something that you have to look out for, that I think is not always taken into account by people. The next one is rent credit. So, okay, this one looks like it's paying a good yield. Um, but where is that yield coming from? Is it coming from the performance of the property? Well, on this one, you can see Mark, the co-owner, is providing a rent credit to increase the total rental yield to 15% for investors over the next month. He's doing this to make it easier to sell tokens, right? It's it's going to until June of 2025. And so that makes this look good, right? The rental yield looks good, but it's artificial. It's just because the co-owner is doing that when he brings a property to the site in order to sell tokens at a good price. And so that's something that you really have to pay attention to. If there's a property with a good yield, but you haven't dug into the financials, sometimes it only has a good yield because there's a rent credit, and that rent credit's only going to last for so long, right? Co-owners, they're not doing this to, as a charity, right? They're doing it for their own financial gain, and so um, sometimes there's issues. Sometimes there's instances where a rent credit makes a lot of sense if you have, say, a vacancy that you know is going to be filled, but you want to have the property brought to the platform sooner, and it's multifamily, and you want to treat it as it's going to be when it's stabilized, I think that can make sense. But in general, it's being used more than anything, and I'm not trying to pick on this particular property. It's being used a lot to sort of boost the token price so people can to sell out, because otherwise the yield would have dropped off already, and that would have been a problem. Artificially low management fees when they're first bringing properties to the platform. This is one that I've seen quite a bit. So, like this property, when it was listed, it has a management fee of 13% of gross revenue. This is a property that he's got listed on Airbnb and is as individual bedrooms. And so 13% for that type of management is really crazy low. And so why would you do that? Well, you would do it to make the numbers look better, to be able to sell your tokens out easier. But so there's a lot of co-owners that have done this when they first brought the property to the platform. And then over time, they realize, okay, this deal doesn't feel great anymore, right? I'm not still selling tokens, and I'm actually losing money because I'm not, I'm doing this management, and I'm basically doing it for less than it's costing me, right? And so then, like, so for this one, there's a proposal out to increase the rental rate on this one, even though our management agreement is supposed to be for 5 years initially. Um, in some instances, it's clear that without a change in the management fee, the managers aren't able to, the people that brought the property to the platform, they might not be able to continue to pay their debt without a different management fee structure than what they had initially. And so anytime that I'm looking at these deals, if it has a much lower than market rate management fee, I'm always going to back into putting whatever I think. So on this one, if I'm doing the numbers for it, I'm going to do, okay, forget about the fact that they're doing it for 13. I'm going to say it's 20 or 25%, because that's what, if we had to go get a third party manager, and honestly, I don't know if we'd find one that would do it by bedroom on Airbnb for us. I mean, that's it is, you can find managers to do by the room rentals in some markets, but yeah, you're going to pay 20% for it. And so when you're running your numbers initially, if it has an artificially low management fee, you have to realize that that's not going to last. And then, speaking of not lasting, number 8 is the fact that in the financials, Lofty is always annualizing 1 month. And so, okay, right now, I mean, it's terrible for this one, right? It looks like, I don't know, there must have been some big expense, and so it looks like this is huge, but maybe that's an accounting error. Um, but let's get into a better example. You can see, here, uh, well, I don't even know if this is a good one, but in general, they're just every single time that you see a yield, they're just annualizing whatever you got paid out last month. I should have had one that was a good one. Um, maybe this is a good one, actually. No, because there's no rental yield being paid out. Uh, but this one is projecting an annual cash flow of $7,764, which makes no sense, right? But it's just taking these expenses and annualizing them, but it's not taking into account paying the unpaid bills or paying the Dow. And in addition to that, it doesn't take into account your vacancy and collection loss. This is number 9, right? So every time that I do these, I always add back in a vacancy and collection loss when I'm trying to build a pro forma for myself. They never include repairs and maintenance. If repairs and maintenance if there wasn't something done last month, then there's none when they annualize it. If they do have repairs and maintenance in that month, they annualize that as if it's for the whole, that the same thing's going to happen every year. Um, Makes absolutely no sense to do that when people are using, your current yield as a way to, decide if they're going to invest in the property or not. And then actually, if you look at what this projected yield is, it is, projected annual return on capital based on, if it's gross rental income subtracting projected expenses, but those projected expenses do not include any vacancy collection loss or repairs and maintenance. So, this projected yield isn't really what you should expect over your holding period. It's what you're going to get in your absolute perfect months. In any other months, you're not going to get that, right? And so this should be more like your maximum monthly yield or something like that, or in a perfect world yield, but it really shouldn't be what they're projecting as your yield, right? Um, in addition to all these other things, there's sort of more amorphous, or sort of more general issues, like you just have a lack of control. So for example, there's a whole bunch of properties that have money in their operating reserves and have taxes due, and there's no way for me as an owner in this property to make sure that those taxes get paid, right? Like, it's something that Lofty is just doing that on the legacy properties. So if it's a property without a co-owner, Lofty is just doing that out of the funds of out of that operating reserve. But if it appears, at least from the discussion today, that there's a whole bunch of them that they didn't get paid and that had some money in their operating reserve. So it's not clear why they didn't get paid. And so, in addition to that, so that's, we don't have that control. But an even more ridiculous version is, this was a property. This is Clybourne. This is a property where the Dow voted to let the property manager do a refinance, and Lofty handed over the authority to sign basically anything. Is what it appears to be. I mean, I don't know. Haven't looked into the legality of the document that they use, but the manager was able to quit claim the deed to his own entity as part of that, part of that transaction to refinance. And at least as of the last time I checked, that deed's never been given back to this entity. So right now, if you own tokens in this DAO, the DAO doesn't actually own anything, as far at least is not the owner of record on anything, right? And now hopefully all this gets cleared up, but we have no control over that. There's been a whole bunch of votes going on about all this stuff, but very little actual resolution. And then that leads sort of into the next thing. There's sort of there's a complete lack of transparency around certain problems too. And this Yom debacle being one of them. If you don't know what that is, you can watch. I have another video that's called, what is it called? It's got the American Greed logo as my thumbnail, and it's called like maybe fraudulent deed transfers or something like that, where I talk about a lot of different stuff. There's been a whole bunch of discussion about this. It is widespread across Lofty. It's not being cleared up yet. And the most recent news from Lofty was, we're doing something about it. We can't tell you what that is, or it will affect the result. And that was over a week ago. We still haven't heard anything, and this whole mess has been going on for at least a couple of months. So, as far as certain issues, we just don't get to see what's actually going on for properties that they're all third party managed. Some of them provide fantastic transparency. Some of them are terrible. Like it's one of the reasons you've heard me talk quite about Earl's properties on here. He does a great job of really just everything that's going on. You can see in his Dropbox and his property pages, and you can understand everything that's going on by the available data. And then some of the property managers and some of the some of them are just being handled terribly, or some of the ones that don't have a co-owner and Lofty is sort of handling the ops on and is being the go-between with the property manager. Those have historically been terrible. Luckily, there are less and less of those all the time. That's why you see all this movement over to Earl and Walick and M1 as new managers for a lot of those DAOs, and hopefully that fixes a lot of it. It'll be interesting to see if M1 and Walick adopt Earl's sort of total transparency processes, where he's putting bank statements and really just every single thing that you could want is in the Dropbox to look at each month. Hopefully that is, and then that solves a lot of the transparency problems. But at the same time, whenever we're doing any of these fractional real estate, sites, we're never going to get 100% transparency, right? If we're not controlling the deal ourselves, there's always going to be something that we're missing. The 13th one, so one of the things that this platform really gets sold for, like the reason people really like it is, oh, we have liquidity on here. And it's one of the only ones where you have liquidity, right? If you have your tokens, you can turn around and sell them, in just a few minutes. And, where that's like one of the key features, right? Like you have liquidity in a way that you don't have it with real estate. So this is one that I have 400 tokens in, right? Current price is 29.54. If I could actually sell at that price, it'd be a profit for me today, because my average basis is below that. But let's look what happens if I just wanted to sell a quarter of them, right? If I just wanted to sell 100 tokens in this, let's hit preview order. I'm going to be really careful not to complete this sale, because we'll see, okay, we have liquidity here. I should have, yeah, look at this. Final price per token, $20, right? Less than $20, $19.50. So we lost 33% of the value just by trying to sell 100 tokens. 100, I mean, this is not a lot of money, right? Like this is like my total that I'm getting back is less than $2,000 after fees as well. And here's all the fees. They don't actually all show up in this fees, which is another transparency issue. But so, one of the things a lot of people are like, I talk about Mogul quite a bit, right? Like that's where I think that they are a superior platform for a lot of reasons. I still have money on Lofty because I'm making really good money buying discounted tokens, but that is because I'm getting the good discounts because I'm providing exit liquidity for somebody else. But a lot of people are like, oh, I don't want to put my money on Mogul because there's no liquidity, right? I can't sell those tokens or I can't sell my interest if I wanted to. One, I think they're working on that. But two, if I actually needed to access, I mean, could I even sell all 400 on here? I bet I could, but let's see. Let's see if I wanted to sell them all. Preview order. If I wanted to sell them all right now, I'd get $7.12 per token, right? So I have like, uh, that's disgusting. So it's not real liquidity, right? It's like, I mean, uh, I'd have to be really hard up to ever want to take well, what is that, right? I mean, more than a 75% discount on the current value, and this is already a huge discount to the real world value on this asset, right? So, um, one of the things I think that keeps a lot of people on this platform is the liquidity, but it really is a fake liquidity, right? One, in addition to the fact that you have this huge slippage if you want to get any sort of real sale on here, you also are paying a massive fee for that liquidity. You're paying the regular, I think you're paying a 3.5% fee to Lofty, plus another 3% or 2.5 to the AMM. What do you do? Okay, let me do it one more time. This time I'm just going to do one token so we can actually see that. Preview order. And so, yeah, 3.5% trading fee plus the market lending fee. This is, what is that? Another 2.5, I think. Um, or is that just straight two? Maybe that's just, yeah, that's 2% and 3.5%, right? So, it's a huge, so you're paying a huge fee, very equivalent to if I was just going to sell this property in real life, even though I already paid fees when I bought it. And I'm not really like, there's no true liquidity. Like, if I wanted to liquidate my whole portfolio today, I would get 20 cents on the dollar of what my portfolio is worth. And so I think that's one of the biggest traps. Like, I think whenever I talk about other platforms that I'm interested in, they always ask, well, what about when I want to sell them, right? And it's like, well, okay, if you and it's a little deceptive because on Lofty, I have exited a lot of properties. The ones that we sell in real life, obviously, that's a regular liquidity event, but we're gonna have that with the other platforms as well when there's a sale in real life. Um, but in the other ones that I've shown, it's always been small amounts of tokens, right? Like, I'm selling 30, 40, 50, 60 tokens at a time, and usually even those I've broken up over several sales, even though I might, when I show you the video about like, hey, this is what I made on this deal and I got a fantastic return, it's taken a lot of little trades to get there, right? It's not always like I just sell them in a chunk. It's usually, I sell a little, let the price come back. I sell a little more, let the price come back. And so, yeah, that's just one that I think it traps a lot of people. I think people love the secondary market on here. Now, I love the secondary market, but I love it for the opposite reason, right? I am here to buy those cheap tokens when people sell, but all the money that I've made on this platform has been based on somebody else losing money, which is much different from a platform like Mogul or Ground Floor, where you're just making money from the economics of that deal, right? Like me on here, all the money comes from, oh, let's see it, all these discounted tokens, right? Let's take a look at all these discounted tokens. Just every single one of these tokens, somebody paid $50 for at one point, and you can just scroll through and there's just tons of them, right? And so, this is not liquidity in the sense that, yeah, I mean, if I wanted to sell my house for 20 cents on the dollar, I could probably get a cash buyer in the next couple of days. I mean, it wouldn't be an instant, push a button, but I bet I could get somebody to pay me cash and close in a week. I mean, I've done that on the buy side for deals before, where I've gotten under contract on a Monday, closed that Friday. That's possible in real life, right? And so, okay, that took me 5 more days, but I also didn't have to I wasn't getting an 80% discount, right? So um, that's one that I think is, it took me a little while to realize just how much the promise of liquidity is not real on here. The buy side can be instant and easy, but even on that, sometimes you get this huge slippage where I'll buy 20 tokens and it moves the price up too far, right? So unless you find a counterparty who's buying and selling with you, you're not, this is not a real benefit, or at least not to the extent that I think a lot of people think that it is. So anyway, those are 13 things that I think are, either that you have to look out for, that you should be aware of. Um, I wanted to just have them all in one video. I'm sure there are other things that I didn't cover, but I think if you really understand these things, um, plus your regular property due diligence stuff, like your flood map, like your comps, like your checking market population data, all the regular stuff that you do on every single platform. Um, I think understanding these 13 things gets you a long way to really getting how Lofty works and keeps you from getting into some trouble. If you've watched till this point and you've thought, hey, Joe's missing these 17 other items, let me know, because I'm sure there are other problems. I know there are. I mean, there's some that I just decided not to talk about because I don't want to sit here and talk for 3 hours, and I think it's a little minor, but I'm sure there are other ones that are probably just as important as any of these. And if you want to put them in the comments, I'd love to see those there. If you want to jump in the Discord and talk about it, if you want to send me a DM and say, hey, I would like you to make a whole video about this one thing, I'm happy to do that, because I'm just here to really try to help all of us use these platforms better. I know this is all real negative stuff about Lofty. I do still have money on here. It's I am making money. It is, but you have to, if you don't have your eyes wide open, you're going to be one of the people that bought these tokens at 50, and now it's selling for 20 or 15 even. I mean, I really feel bad for everybody who were like the very first people on the platform who bought all these tokens for 50. I mean, I've been lucky that since I got on here, it was already really obvious to me. And I think some of it is you just had a bunch of non-real estate people. Like, I never would have paid full price for stuff in Cleveland and Akron and even Chicago. I mean, most of the markets where the stuff's just really gone way downhill, I don't think it's a big surprise. I think that if you look at the assets, if you look at the markets, they were never going to be money makers. But I think it's a lot more clear now, because you do see, 2/3 of the properties, or over half of the properties below the $50 token price. So it's like very obvious that the people are losing money. Um, at the same time, I think if you're savvy and you're picking properties well, and you can make unbelievably good returns by being the exit liquidity for someone who's just trying to sell all their, just about every day I get an alert set up. I have an alerts where something's being sold for below the point where where I know I'm going to be comfortable buying it, and I go in there and buy it, and if it moves up, I sell, and if not, I know maybe it's one that I'm expecting to sell in real life. um, and so, yeah, I mean, there's still a lot of potential. I don't mean to like turn you off from the platform altogether, but if you are someone who's not willing to really run your own numbers, dig into properties yourself, truly understand what's going on, understand all these points and probably more, this is probably not a platform you're going to be successful on, right? And so that's what I just want to make sure that's clear, because I do talk about it a lot. I spend a lot of time buying stuff on here, selling stuff on here. And I don't like to see people get hurt because they don't understand what's going on. And if you're in the Discord daily, at least once a week, somebody shows up and is like, hey, how come I lost all my money on X property? I don't understand what's going on. And this is not a passive investment. It's not an investment that you can just trust the numbers that Lofty's putting in that little buy box screen. You really need to dig into all of this stuff, understand what's going on. And yeah, that's about it. I think that's the video for tonight. Uh, until next time, I'll just keep making mistakes so that you don't have to.